Let's start our conversation on UK assets. I spoke to Jörg Kramer of Accreditus a little earlier on. He said that the market is complacent. In particular, FX market is complacent around Brexit risk. He said that he pointed out that euro pound, euro sterling is actually in its usual trading range from 2009 to 2013, which seems amazing when you consider the uncertainties and the risks that could lie ahead.
Absolutely. Good morning, Anna. I've got to say I agree wholeheartedly with that sentiment. I think it is incredible how complacent sterling trading has been. As your previous guest mentioned, sterling has appreciated over the course of this year. And all we've really seen is the uncertainty increasing and increasing as we first approached tomorrow's deadline. Obviously, that has now been put back a couple of weeks. But last night, all that really told us, once again, is what Parliament doesn't want to do. There was still no consensus around what Parliament actually does want to do, and with only a couple of weeks to run, I think that risk of running into an accidental no-deal Brexit, which we have to remember the default is for a no-deal Brexit, is really getting quite high, and certainly sterling is not pricing in that probability whatsoever at the moment.
I thought it was interesting that amongst the Conservative Party, one of the little factoids from last night's voting, amongst the Conservative Party members of Parliament, no deal is actually quite a popular choice, even if it doesn't have great support across the House as a whole. That gives the market a lot to think about, doesn't it? I suppose as we enter a leadership challenge in the Conservative Party, we need to be mindful of that particular background story, those sentiments around no deal, because we're going to see contenders for the leadership really trying to flex their muscles as Brexiteers in chief, aren't we?
Exactly. I mean, and that's what a lot of the last sort of 6 months has been about. It's been about political posturing, and it seems to be trying to oust May and not really thinking then about the consequences of what that actually means and what then the resulting process for Brexit is after that. So no, I think it's definitely that. Let's say that I repeat that no deal probability is, I think, much higher than the market is pricing in. I mean, so cable up here at sort of 132. That's a only a very small distance away from where we have fair value at 135, and more or less where we were prior to the referendum back in 2016.